Hello, folks. Welcome to this week's Forex commentary. And not just, our regular commentary. I mean, this one is April special edition. I said I was going to be going through multiple pairs, and, I said it on my Twitter account, and a lot of the audience, they made mention of pairs they would like me to check. But for a start, I'm going to go through the regular, the dollar index, euro, then pound, then I'm going to go through the rest of the pairs. So first off, don't forget to like and subscribe. The last video I uploaded, kind of like everyone was watching, but people were forgetting to like. I'd really appreciate if we would always engage in this post so that more people can see it, just for the fact of it, right? And I appreciate everyone who is making their comments, engaging and liking. I really appreciate. My YouTube channel is growing. So now straight to business. So every month I always go through the dollar index on the monthly time frame. Last week's commentary I couldn't because of the first day of the week, which was Monday, was actually the last day in March. Okay, and that's why the commentary was extended. I said things that would lean on April's trading. Okay, for example, talking about the drawn liquidity last week to be the previous monthly low, and we talked about some discount fair value gap. Now the question is, what happens now? All right, and that brings us to today's live market commentary. Okay, so if you look at the market, okay, there's something you don't understand. First, we're in a discount. How do I know markets are in a discount? Well, if you take your Fibonacci retracement tool and you measure from the low to the high, you see we're below 50%, and not just below 50%, below the 6.8%. So we're at a discount. And if I'm bearish and market is at discount, I cannot be as bearish anymore. That's just one of my rule of thumb. I cannot be as bearish anymore because it's one of those things I learned when I was trading the volatility indices, because in that market I can't see institutional order flow except through candlesticks, right? Okay, that's the only way I can trade that market. But in Forex, it's a different thing entirely because I have data and other means to validate what the high time from institutional order flows is, right? So in dollar index, what do we do now? The prices are at a discount, and now this is a new month. And what do we do? What's our anticipation in April trading? I mean, what really do we want to do? Now, if we go to daily time frame first, because I want to show you the hedging program. Okay, that's very, very important. The hedging program, and you notice something. We are back into the buy program. Okay, we're through the net zero line, and the markets are tilting. Okay, there is already new buying interest, okay, in the market. Now this line here isn't exaggerated yet, because you can see markets being dangling through, and it's as if, but one thing is for sure, this huge gap through into the buy range obviously is showing there's already a shift in interest. Okay, it's already priced in already. There's a shift in interest, and there's about a couple ways this could actually go, really, because if we're in a discount, okay, if we're in a discount and the markets are seemingly bullish, how do we approach price action? Really, how do we want to approach price action? Now, that's the point of the mentorship, because now everyone understands. Now, if high time from institutional order flow is bullish on dollar index, please, what's the run below the previous monthly low? Yeah, of course, if someone said Torisu, the person is absolutely correct. Okay, that's a Torisu. But also, if we understand the high time from institutional order flow, how do we validate the high time from institutional order flow? Market structure, the change in the state in delivery. Now, what's our key level? We have a reference candle here, the down candle here, the order block. But that's only very speculative, because we don't have any validation yet on the weekly time frame. we don't have the validation yet. We just have the market reject off of this discount fair value gap. You'd see the objective I called last week, which is this weekly discount fair value gap. And if you look closely here, you can see 1, 2, 3, 4, these consecutive down candles. Okay, these consecutive down candles. Yeah, that's the order block. Okay, that's the bullish order block. And obviously, oh, it's the same thing as one on monthly time frame. Well, you've seen it now. Okay, it's the same, literally. This is the last down candle on monthly time frame. So for those folks, like me, I'm wondering, Settle Block is trading, but it doesn't have a subscription on Trading with You. Well, I don't really need a subscription on Trading with You, except if I'm fully trading multiple assets and stuff like that, and then I want to monitor everything at a single stretch on a multi-time frame basis. Well, then the subscription can be useful for me. Split screen and all of those add-ons. Then that makes sense, right? So why I made reference to that is that you can look at those consecutive down candles and you can be referencing an order block in a time frame that you probably don't have. Sometimes when we look at 4-hour time frame and look at those up close candle, it's one order block on the 8-hour time frame. Sometimes it's one order block on a 12-hour time frame. Okay, but you don't have the 12 hours, so you can't say it. But it's your experience and proficiency in reading price action that's helping you alleviate the problems or solve the problems of, oh, I don't have a trading view solved. Okay, imagine you working with a strategy that demands you to go through maybe the 12 hours time frame or the 8 hours time frame and stuff like that. It can be very frustrating. Like, can't I trade on the free trial without having can't I use this strategy without having to subscribe for the premium package or the pro package and stuff? Okay, so that's really on the side. But basically, market structure now, this is a market structure shift against the high time frame institutional order flow. It run below previous monthly low. Okay, when institutional order flow now is bullish on dollar index. Now, someone will say, okay, how do we trust that? Now, in liquidity runs, we're talking about how there are levels of high resistance, and this would really come into play because my thought process this month is I want to wait for the markets to validate the high time for institutional order flow. I want to do less of intraday trading or daily time frame speculation. Oh, this drawn liquidity and market don't validate that. No, that's not what I want to do. I want to focus on the high time frame institutional order flow because this is the time I want to be patient. Why do I want to be patient? Well, because if I'm not patient, I'm going to probably miss the move early. Okay, I'll probably have wrong expectations because the markets could literally like consolidate. My experience from January's and February's trading really taught me a lot. Okay, especially this current climate in the United States of America, because I've learned a great deal to adapt in this kind of market, and that's what I want to put in currently now that we have a shift in sentiment, right? When I was mentioning liquidity rounds, you can see we have 1, 2, 3 consecutive down candles. So when markets close through, that's a change in state in delivery. Whoa, you didn't see that before? And now I'm pointing out to you because now institutional order flow is bullish. These consecutive down candles make sense to me now. And a run below this previous low makes sense to me now. This is run below sell side liquidity resting below here, and run through relatively equal highs this buy side liquidity. So the transaction between opposing liquidity pools of sell side and buy side, above this high, makes this level high resistance. So I'm not expecting the markets to run through here. Even if the markets is going to run through here, I'm not expecting the markets to go through there immediately. Okay, you see, I'm still leaving the option for the probabilistic nature of the markets, because markets can run level of high risk, but when markets do that, that's a Tory soup. So if I'm teaching a lesson on how to anticipate Tory soup, the first thing I'll remind you of is high time from institutional order flow. I'm still going to talk about candlesticks, because a run below previous monthly high when institutional order flow is bearish, that's a Tory soup. So a monthly high is high res by itself. So when we are looking at the markets like that and we see a level of high resistance and the market goes through the level of high resistance, when you understand institutional order flow and you understand the run against the high resistance swing point is against the high time from institutional order flow, that's a torso. Now this same idea we can begin to compress, we can begin to refine it into lower time frame and refine and and that's our subject. But the basis and the basics for understanding story soup, that's how you understand what story soup. The simple definition ICT gave, I think, is Forex X-Men series. The time I first watched it in 2020. He talked about the first run above or below an old high or low. That's how we define it. A false run above an old high or low. Now, what kind of high or low are we talking about? Well, there are levels market shouldn't run through initially in the first place, because market structure is shifting when institutional order flow defines something else. So when market structure does that, institutional order flow pulls the weight. Simple. So now that we understand the high time from institutional order flow, because if you're watching this commentary and you don't know what the high time from institutional order flow is, really, I'm doing a mentorship. So we are at the discount. Institutional order flow dollar index is bullish. We've traded below previous monthly low. Now I want to wait. Why do I want to wait? I'm waiting for validation. That's why I want to wait. I'm not waiting because I don't know how to trade or I don't know how to play the buy and sell button. For folks that think this is a game, okay, I want to wait because I want validation. And if we go to the weekly time frame, okay, if we go to the weekly time frame, we have markets meet objective, and one of my rules is that when markets meet objective, I really just want to wait, because they are likely to reverse or they are likely to continue or consolidate. This is low probability condition for me personally. So I want to see the market validate my buys. And how do I want to see the market validate? Well, of course, I want to see market flip premium raise, since institutional order flow is bullish. And what premium arrays do we have? Well, we have these two consecutive down candles. But do I need this? Well, I really don't. But this is the basics. I want to see the market flip premium arrays. But then we could go to the daily time frame, because of the weekly chart is very extended. And one of the things we want to see is you can see this old gap, the gap that happened between Thursday and Friday's trading. Okay, yeah, no, Wednesday and Thursday's trading, because this Friday's trading. Sorry. So we want to see markets, flip this gap. This is an old daily volume imbalance. Why is it volume imbalance? Well, it was an actual gap. Okay, market closed here and opened here. So there was no volume, no trading at all. So that's a volume imbalance. Yeah, because someone asked me what's a volume imbalance and stuff. Well, this is a volume imbalance. There was no trading. But then during intraday trading, the markets tried to deliver buy side. Okay, if you watch carefully, the markets tried to deliver buy side into the previous day's low. Okay, the previous day's low. It doesn't make it less, although on an intraday basis the market is trying to trade efficiently, because the markets close here and open here, but between these candles body close and these candles open, there is no buy side delivery here in terms of body, because the market closed here and open here. What is happening between here? That's the volume imbalance. Now, if probably this candle closes the low here from here, and the markets happen to deliver no wick at all and just open and continue to go lower, then we have an actual gap, like an actual gap. But this is a volume imbalance. It's void of buy side. Okay, in terms of the bodies of the candle between these candles close and these candles open. Okay, void of buy side. But markets did a little bit of efficient price delivery to return here into this candles low. And if you check here, if you look closely, return into this consecutive candles. Okay, and that's how candlesticks tell the story. That's simply that's simply what it is. Okay, so when you're looking at the markets, I think the most important thing anybody can do is really just learn, candlesticks trading Bible and baby pips. And when you do that, just turn on my YouTube channel, and you don't have any past experience, negative experience from SMC trading or supply and demand and stuff. Because here we understand the market mechanics. So, yeah, that's what we're doing. We understand market mechanics simply, and we understand institutional order flow. Then we understand market structure takes a back seat. It's not me really. Is market. You understand? So so now I'm waiting for validation, and I'm willing, and I urge every listener here to think about it really, because we want to get in on the next quarterly shift in the market, and and for that fact, I want to pull up you know, yeah, this is not tendency chart, so everyone can see. Now, I looked at the seasonal tendency. I think it was in January or in February trading, and I was talking about how the seasonal tendency reflects, seasonality in the market. Although it's not up to date, but at least it goes between 1985 to 2019. This has been like the summation of the cumulative of market and performance over the years. So what's happening in April? Well, we see April is a bearish month for dollar index, although not the first week in April. Okay, the first week in April, markets rallied a bit, and before markets went lower, and it was kind of like the early expectation we had in April, very very similar to the early expectation we had in March, because the first week of March we saw on the dollar index based off of seasonal tendency that the markets are likely to rally a bit, then sell off. And the same thing in April, but the markets opened in April and just validated the monthly buys, and that's the same thing that happened in March. Okay, and it doesn't disregard anything. That's why I like to look at these kind of data points from a holistic perspective. I put them into consideration because it doesn't hurt to put them in consideration, because if you put them in consideration and market validate your bias, then you just follow what market is doing. Because in as much as this is giving raw fact and data of how the dollar index has performed over a time period, okay, this also gives you a lens of what institutional order flow has been, you know, like I said, I'm repeating myself, sorry, over the years. So it's not verbatim. You don't want to look at it like, oh, it's verbatim and stuff. You just want to look at it, oh, since I'm in a period when dollar index is bearish, what does seasonal tendency say about it? Now that I think dollar index is bullish, what does the seasonal tendency say about it? Well, seasonal tendency says the last week of April into May, we're going to see dollar index form a yearly low. Okay, this is a yearly low because it's going to go through May up until October before, and October just in periods, not essentially always, because if you look at the 5-year average and the 15-year average denoted by this kind of purple and maroon, I think I'm not so good with colors. I think this is maroon and this is very light pink or purple. You can see they never formed another low in October, just the 35-year average. So April's trading, if dollar index is bullish, okay, we're going to be forming a yearly low in April, and that's just the idea we want to get. So April has the tendency, the seasonality to form its low, and basically that. I'm not going to go through the 4-hour time frame because we need validation, okay? And if you look at daily time frame, we have 1, 2 consecutive down candles. It closed below here. It closed above here. Still, it closed here. Validate the high time frame institutional order flow. And trust me, there's gonna be signs. If I'm speaking like everyone online, there's really gonna be signs. But for a start, we have a premium array here. I kind of like specify this premium array. Let me take this one off. I'm going to take this off here, take this one off to All right, so we have a cleaner chart. Okay, I always prefer a very clean chart. So we have this consecutive candles here. We have a premium here, and because we have this premium, and DXY is still bearish based off of market structure. There's nothing has changed. I'm only looking at it from the perspective of the high time from institutional level. The markets could really trade here into this volume balance and offer some downside. Okay, very, very possible, very, very likely. In fact, markets could trade into the volume imbalance because since we're still bearish, based off of market structure, not the high time institutional flow, market structure. Market has to mitigate this level. These levels are levels of high resistance. So market is not going to go through them. I don't have that expectation for the market to go through them. Okay. But what I know is that I want to be patient. Okay. Because I probably will take setups. Okay. But I'm not going to go in full my normal risk. I'm not going to go in full risk. No, I'm not going to do that. I'm going to preserve the bulk of my risk for periods when the market does this, because the first trades I'll be taking will be off of the daily time frame. Okay, and I'm going to show it. I'm going to publish it on Twitter. You're going to see it. All right, I'm still going to show probably a screenshot of my swing trade, because I have a swing trading account. Okay, I'm going to show you a screenshot today. I'm going to post it online, and you're going to see it. And when you see it and you think about the last lecture we had, which is validating the hijack from institutional order flow, you will now understand the reason for the positions I took. Okay, you see they make sense now. All right. So, but for a start, I know that markets trade below into this weekly discount, and it could follow with a reaccumulation to discount, because after a Tory soup, markets always follows. It's a three-stage event. I keep on saying it. A Tory soup, a reaccumulation to discount, then a near-term imbalance, inefficiency, then the market explodes. So what am I anticipating? When markets trade into a premium, what premium? Well, this volume balance or something, these consecutive up candles, whatever markets will do, markets can return back into the range. Then when market breaks structure again, when there's a market structure shift, a change in the state in delivery, it doesn't have to be these two down candles, probably candles in the future. You see, I don't know what those candles are, but I know that it will form. It will always form. I have no doubt whatsoever. And when that forms, and I know that markets are in line with the higher time for institutional order flow, probably by then, this becomes, very, very evident, and very, it's become very, very obvious, and everyone can begin to trust it, right? So that's all said. I'm done with dollar index. Quickly on Euro USD. So now I'm going to be very, very fast, because I'll have to go through multiple pairs. I'm not going to spend time. I'm going to talk quickly. So Euro USD, we're mirroring dollar index, Euro USD trading to premium. And, we talked about the possibility that DXY returns into a discount on daily chart. I don't know what that's going to look like. Okay, all I know for certain is that now we trade into this monthly bearish order block. Okay, we trade into this monthly bearish order block. Not just that, you can see this candle, 1, 2, 3 consecutive up candles. This is a change in state in delivery. Okay, and this is making sense because of the high time institutional order flow. Now, if you look at Euro USD on the daily charts, you'd see that we are already priced in for sell side. We're so priced in already on Euro USD, and DXY is beginning to validate it. I know regularly I always talk about not using foreign currencies, except when DXY validates. So DXY is validating, it makes sense. Now I want to flip your retail thought process. I want you to look at markets like this. If the high time from institutional order from euros bullish, that's way back in October, and this dollar index just flipped in December, right? Okay, say you were blind to dollar index, and a run below an old low when institutional order flow is bullish is a Tory soup. Do you know you can buy here as soon as market made this low? Do you know you can buy here? And you can buy as soon as market made another low? And you can always buy when new lows are forming? I want you to think about it. Now, anybody who buys here is probably better off than every other retail speculator that probably try to trade this thing, because most of these moves were missed. Really, if you day traded, you probably missed most of this move. Now think about it this way: when you can see this, and it run below this low, I mean, that's just a strategy. if you understand institutional order flow, you're waiting for markets to run against an old low on the daily time frame. So you're buying here, markets run below this low, trading to a discount, you're buying here, markets run this low, you're buying here. I mean, this is hindsight, but I want you to think about it. And really just think about it. Whenever markets makes a new low, when it's against the high time from institutional order flow, you are engaging price. That's a model on its own. And this is daily time frame, and you're buying. Oh, where am I going to put my stop loss? That's why you're not going to make money trading, because you're just so concerned with risk, and it's obvious the money you're trading with you can afford to lose, and that's why you're so concerned with risk. Check out Michael Saylor on Twitter. Is a 91 manager MicroStrategy, and see how he trades Bitcoin, and think about what I said. And I think it opens a new world to you how you should see Forex. When you think about it from the perspective of investing, and you know for a fact that you have a cheat code, you can literally see where institutions are putting their money. And when I call it institutional money, you can literally see where institutional money is. You just need to put a very simple strategy, and you're making a whole lot of money. Now, say you want to make yourself very efficient, and you're only waiting for dollar index to align. So when dollar index aligned around the 17th of December, and euro has made a new low here, you're buying, and made a new low here, you're buying. So you're buying this low, you're buying that low, and if you think about it, it overlaps a key level. What key level? You can see on the weekly time frame, we talked about this level on the channel, okay? And what levels that you can see? We have these consecutive down candles. 1, 2. This candle's high. This fair value gap. Okay. An order block. When we return it here, it becomes a breaker. But now the order block comes. The fair value gaps come first, because we want to see it return to the body of the candle. I'm not going to cherry pick. So the fair value gap overlapping an old high. So this is an order block, but we are referencing the high of the order block. The high of the order block. Why? Because there's a fair value gap here. There's a fair value gap here. The fair value gap now comes before what? The order block. So in the period metrics, fair value gaps come before the order block. And now we are referencing the fair value gap. And think about it. And this is periods when the high time from institutional order flow changed. Okay? When we're talking about Euro being bullish. See? Bullish. And everything changes. And this kind of period, when you begin to speculate, because of probably there's a potential sell side you want the market, and that's what this condition has really taught me. The kind of mistakes I've been making on my analysis that I'd have to adapt, when I could have made things very easy for myself. For example, thinking about this discount fair value gap. This is a daily time frame, and this is the weekly time frame PDA, right? So you can see that whenever you're describing, you just have to make reference to the high time frame, because markets would absolutely forgo lower time frame levels compared in contrast to the high time frame level. So this is high time frame, and markets don't need any refinement, trying to refine. And I think I could make an argument for it on dollar index last week, because we had a level on the weekly time frame the markets could get to on capital.com, or there's a different thing on TVC. But you can see on the daily time frame, on the weekly time frame, okay, markets are straight into an obvious gap and stuff. Weekly time frame shows sponsorship, and market just went away. Although there will be validation, of course, you're going to see the validation, but then sometimes you just chill. Don't need to look at every other thing. Just focus on one side. Focusing on one side of the market can really help you early on, because a lot of people will still have to grow into managing expectations. So when you understand the high time from institutional order flow, you just need to focus on the key level and reference key level. Remember, when you're trying to validate the high time from institutional order flow, there's a key level you want to reference, and then you want to wait for market structure to validate that bias. Okay. Now, if we go to in the dollar index, we have the key level on the monthly time frame, and then we just want to see the markets validate that bias. Okay, now we don't have any validation here, and markets are still bullish on Euro US. This is still bullish. Regardless, this is still bullish. We're still above, this level here, this inversion fair value gap. We are currently at the breaker here. So the markets could literally just return into a premium first, and before markets does anything. So I'm just chill, not doing anything. This is not the market I'm going to trade now, because I know there's a shift, and Someone would say this high on euro looks like relative equal highs and markets could run. Well, the markets could run it, truthfully, but I'm not really concerned about that because I don't want to speculate on what the markets will do now and what the markets will not do, because the markets have showed me clearly that the high term institutional order flow is bearish. Now, what can validate the order flow on a monthly time frame? Well, you want to see April's trading close. Oh, but 7 o'clock. April is just starting. Well, if you want to get the lion's portion of the meat, you just have to wait. That's what it is. I mean, you've tried your method for years now, and we are here today. We're learning this together, right? So why don't you just subject yourself to these, and let's be patient together. And you're seeing the logic in being patient. It's not because you're scared of forex, or you're scared of trading, or someone is teasing you don't know how to trade. No, in fact, if someone teases you don't know how to trade, okay, fine, okay, yes, you don't know how to trade. Then what? You ask the person, do they have any other thing to say? Stop being pressured into taking trades. Really, the market isn't doing anything. You need to think that, is this for me right now? Because you know that there's going to be yearly low pricing on dollar index soon, and you want to be a part of that mega trade. So you don't want to lose things, you don't want to blow your capital, you don't want to lose the account before then. Because when that time comes, if you take the least lot size 0.01 and you take it on a rally, although you're going to wait, you have to wait a lot, but minimum of 3 months, and you're going to wait until the hedging program shifts again. Literally, that's what's going to happen. You're going to wait till it shifts. You're not bothered, because when you get to any, you're not bothered, oh, it runs previous weekly low, oh, I have to close. No. Except you want to partial and pay some bills, and that's where 0.01 is not going to be favorable. Okay? It makes sense to trade like that. In fact, I think in coming years, my audience would easily trade the high time frame. Easily. Because, see, we trade above previous monthly high. If this month closes inside the range, that's something we want to look at. Because now we have an inverse fair value gap here. We now have fair value. That's a draw on liquidity. Now, draw on liquidity overlapping with institutional order flow. But when markets trade into the draw, are you going to collapse your trade? No. Why? Because institutional order flow predefines what happens after market engages the draw on liquidity. And what's institutional order flow saying? Well, euro is still bearish. Whoa. For how long? Well, minimum 3 months. So do I close? No, I wait, I hold. I subject myself to the high time from institutional order flow. These are the most greedy set of individuals, smart money. You're literally seeing their position and you're worried that the markets are suddenly going to reverse. They are very greedy, but your position gets published. Oh, come on, really think about these things, really. I don't know, are people really thinking about these things? Anyways, we go to pound. So we see pound, trade into the monthly bearish order block, this last up close candle. Okay, this is bearish order block. So that's a premium area. So if we're bearish, for example, since we're bearish, high time from institutional order flow doesn't mean markets can still consolidate. This is still very early. This is very early. We have like 23 days left. If this closed like this, well, May is, you can just literally just buy the opening candle of May and place your stops here or a couple of points above this high. That's a trading model. Okay, so we're still early in May, so there's still time for markets to move back and forth and all of that. But for a start, markets is rejecting here. We've run through previous monthly high, and institutional order flow is bearish. Okay, we want to see foreign currencies sell. We'll go to weekly time frame. Okay, you can see markets absolutely met our objective. On buy side, we're eyeballing this objective, and markets has traded into this inverse fair value gap. You can see this was fair value gap we are eyeballing, and markets finally returned back after the met objective. So what is my expectation intraday? Like I said, I want to wait, but there's something beautiful on the daily time frame. Okay, after Friday's trading, you can see daily time frame has closed below this consecutive of candles. Now, if you're very familiar with the mentorship, this is a change in state in delivery. This is tipping the hands that G is likely to be bearish. But now we understand this run higher was a Tory soup, and markets could literally return into a premium because market structure is still bullish, and Monday's trading could actually validate that. For example, if Monday closes inside the range of Friday's candle, it's very possible for Tuesday to run into this bearish order block. Very, very possible. Very, very possible. Very, very possible. Tuesday's trading could run into that bearish order block. That's a daily bias. And why is that? Because we trade into high time from key level, and market structure is still bullish. So we just need dollar index to trade into short-term premium, and probably return to a discount, and GU can follow suit. Okay, so that's it. But now we have a change in state in delivery here. Doesn't mean I want to sell this candle. No, it doesn't mean that, because I still need dollar index to check boxes. I still need dollar index to check the boxes. Okay, so I think that sums up the regular market commentary. So from this point onwards, I'm going to skim through charts. I know GBP USD was included in the market commentary, but of course I'm bearish on GBP USD. Okay, and this candle closure today, if Monday closes inside the range of Friday, and now that we've hit a key level, the markets could return into a premium. What's the premium? Well, the body of this candle, this bearish order block. Could the market go for the rejection block? Very, very possible. Why? There's long wicks here, but low hanging fruit, low hanging objective is the bearish order block. So now I'm going to go through gold, and I'm going to do something. Someone was asking me, since we don't have the COT hedging program, how do we do qualitative analysis on gold? Well, market structure, and well, you still have an idea of what the high time institutional order flow is. Look at historically. Whenever there's a green candle, what's the likelihood the next candle is green? It's as easy as that. I mean, it's as easy as that. Look at periods when the market changed, really. Probably gold ran into short-term premium. Look at the rejection here. Look at the rejection. It's likely to return back into the range. What range? We have a fair value gap here, and there's a green candle. The market begins to consolidate here. Consolidate. And for every green candle, there's the next green candle. Now, this is a 12 months time frame. That means one candle denotes a single year. And you can see the next time we had a red candle, we had an indecisive year, and market trade into a fair value gap. And after that, gold. And that's really what it is. And here, there's a change in the state in delivery. Whoa. Exactly. Works on all time frame. And now this candle closed inside the range of this candle, and this candle is indecisive. What did I tell you about indecisive candle? Especially when you have a bias, you want markets to go for sell side first into what? A key level, and probably the market is validating the bias on probably the monthly time frame, because this 12 months you have to break it down to the quarterly time frame or the monthly time frame, and then you can go in on a position trade and see. January 2023 bullish. Was likely this is bullish? Well, very likely bullish, and very likely also bullish. I think I've really simplified this as much as possible. And you can see last year bullish, so this year is likely to be bullish. In fact, this year has already been bullish. All right, so let's go to 6 months time frame. Let's see what's going on there. Oh, we're still going to the first 6 months in 2025 trading. The last 6 months was bullish, the prior month was bullish, and this is likely to be bullish too. So we're still bullish. All you need is, where is the market headed? What's our objective? Once you understand the objective where the market is headed, you just blend in the high time from key level. Now, in the early portion of April's trading, because April begins a new quarter, and this is 3 months, so there was a run above the previous candle, the 3 months candle, and market is returning back into the range. It's just as easy as that. When market run above previous high, don't you want to wait? It's the same thing I talk about. You want to wait, really. And you want to wait because why are you waiting? You understand higher time from institutional order flow. Higher time from institutional order flow predefines what the markets are likely to do. Okay, so So you aren't just simply waiting around and stuff. You understand what the high time frame institution order flow is doing, and you just want to wait. Now, where is market? What's market doing? Market is trading down inside the range of the previous monthly candle, and the previous month, March, was bullish. So it's very valid to have an expectation that this month still closes bullish, really. And if this month doesn't close bullish, you know the next month is going to be bullish, really. But now you have a discount array here. What's the discount array? The previous monthly high, PMH, previous monthly high. And now that you have a discount array, you understand that markets are likely to return here. Market doesn't have to return here, but because the markets are showing they want to go lower, and you have a discount array that the markets are likely to trade into, that's probabilistic thinking. You have a discount array. The markets can trade here and the markets cannot trade here. What you should focus on is the high time from institutional order flow, which is bullish because this candle is bullish. So we are anticipating this candle to also be bullish. If it doesn't close bullish, well, probably it rejects by the end of this month. So we go into the weekly time frame and we see for ourselves. What do we have here? We have a gap, and we have the previous monthly high, and we have a bullish order block. This down candle prior to all of this move, you can see there's a fair value gap here, high probability order block, but there's a fair value gap before the order block. And when there's a fair value gap before the order block, we want to put into consideration this fair value gap first. That's probabilistic thinking. I'm not saying the markets must come into my order block before I trade. I'm not saying the markets can do whatever the markets want to do before I trade. I'm leaving all of the expectations for the markets to validate my bias. Okay, and that's what I'm doing, and that's what I want to do. Sorry. So now this is a weekly time frame. I need to validate my monthly bias because my monthly bias is bullish, institutional order flow is bullish, and we had a correction last week. So I want to see the markets validate my bias. It doesn't have to be this week, not because the candles are rejecting. I'm like, oh, markets are validating. No, I'm not going to do that. This weekly candle has to close. There has to be a change in the state in delivery on the daily time frame. You want to use it to validate your monthly bias. All right, because the first, okay, this was the first week in April's trading. Okay, so if we have a bullish close on this week, and you know the monthly bias is bullish, then that's validation. And then you have this candle close inside the range of this candle. Note, if we have a bullish close, it doesn't mean the next candle probably wake up on Sunday next week and markets don't sell up. But you understand that when this candle closes inside the range of this candle, and for some reasons that you do not know, markets just woke up on Sunday, next week Sunday, and market sells below this low, then you recall, well, you have a level here. But this candle has validated your buys already, and primarily you want to go in the next week being bullish. And when market runs below this low, that's a tourism into this level, you're buying. That's how to manage expectations, folks. That's really how to manage expectations. Yeah, of course, I had to check this market during the weekend because there was a lot of requests for and stuff. So and that's why these levels are here. So I had this previous candles low, and this again one of the reasons why I like to record the commentary on Monday, because I want to see Sunday's trading. I was looking at the previous daily low because when this candle closed below this candle's low, this became our discount array on the daily time frame. This became the key level on the daily time frame. So particularly, I want to tell whoever was asking me to check go that, okay, look at this candle's low, put it out. A sell from here is high probability into this level here. But this is what I'm saying now. I didn't check the daily chart before I started the report. Okay, so this is what I'm seeing now. So I want to go into the file because I want to say for myself. This is personal. For personal, I want to say for myself. Okay, the market is opened and went lower and met objective. Okay, that makes sense. Okay, so markets opened, traded lower, rejected, and traded here. So I think there's nothing you want to do today. So everything on the weekly time frame is what you're going to use to guide your expectation throughout. Okay, now gold is at the discount fair value gap. This is obviously a buy level. If I'm institutional money, I'm buying gold immediately here. I'm buying gold immediately here. I'm saying I'm buying gold immediately here. There's nothing else I want to do. Just buy gold. Now we're waiting for the weekly bias to validate. Okay, the high time institutional order flow. I'm going. Now let's check silver. Yes, silver has been a really bad boy, but of course, yeah, I went through silver. I think gold is already ready for buys because I'm looking at silver now. Silver and gold, they are very correlated, very, very correlated. There's no way you want to check gold, you want to check in silver. But last week they decoupled, obviously, because last week I was looking at silver and I posted a chart on my Twitter account and silver was just going AY. I'm like, what's going on? I wasn't expecting that. And you see, it's one of those things you cannot control. There are periods in markets you cannot control what the markets are going to do. So when I talk about my analysis, I don't look at it in the beyond and all perspective that, oh, market has to do that, because I know I can be wrong. Why do I know I can be wrong? There are periods in the market beyond my control, and that's how to think. Okay. And when somebody comes online and is trying to promote the idea that, there's a kind of superior analysis, there's no superior analysis. I don't think my analysis is superior. I only think I've been able to learn the probabilistic mindset. I can think in probability, not just in my trading, but in the way I view the market. And because of that, that's logic. Probabilistic thinking itself is the true logic in markets. Why did I say true? Oh, damn. I've been reading a person's post too much. Okay. So on the 12-month time frame, silver bullish, looking bullish. And somebody's eyeballing here. Well, it would be nice if we can have a close above this candle here. So at least we know that in coming years, we know what silver is likely to do. Okay. So we're still below, but it still doesn't mean, because there's gold. Silver and gold, very correlated. So while silver is doing its thing, you're looking at gold to validate what silver is doing too and stuff. But you can see these consecutive down candles closed above. Silver is bullish. Silver is bullish, really. There's something I want to show you exactly. Is a 3-month time frame. If silver is bullish on the yearly time frame, the first 3 months of 2025 was bullish. That's validated the yearly bias, because this year is bullish for silver. Now, if we trade below the previous quarterly low against the high time frame institutional order flow, please, what's that? Obviously, I can't hear you. If somebody said Tory soup, then exactly, you're so correct. It's Tory soup. So now we trade below this low. Okay, we want to see the market reject quickly from here, because this is manipulation, and we want to see the market reject quickly. Now think about yourself trading intraday, and you probably bought a bullish order block. You see, it makes sense to leave a couple of points outside for your stop loss, because there are things you cannot control. That's probabilistic thinking. So if you're trading with 2 pip stop, you're doing yourself a disservice. Especially when market takes you out and reverses. You did that. It's not your strategy or anything, because even your strategy needs manual intervention. Markets have manual interventions at periods. There are periods when the markets want to go high, and then there's just manual intervention, and things are just going in the opposite direction. It happens. So in your own trading, you don't just want to subject everything to what your system says. There are things you need to input or make this part of your system. Your system can ask you to put your stop loss here, but the markets are probabilistic and you're very sure and confident of bias. You can just extend your stop a couple of pips above, not because of anything, just because of periods like this. There are times you probably want to take a trade and just leave the chart. I've taken trades on the 4-hour time frame and I've gotten stopped out, and I risked about 2% and I lost the trade. Not because I was wrong. Markets just traded 1 pip below my stops, and that was it. I lost the trade. It's this kind of experience that makes you realize what the market truly is. And you want to focus on catching first. You want to first get in sync with the high time frame institutional order flow by trading, the high time frame levels. Then subject yourself to intraday trading along the way, because most of the times you might miss out the trades, and that's why I promote trading off of the high time frame, simply because of that. You've experienced it in this period. Okay, I'm sure you have your reasons now that, oh, this makes sense. There's wisdom in it. I'm going to buy wisdom. All right. So that's the monthly time frame. On the weekly time frame, they're really the same thing. We have market run sell side here. And if this week can close like this, we're going to be buying silver. Straight up, we're buying silver. Low resistance liquidity runs. Okay, low resistance liquidity run. And we're going to target new highs on gold. So we're done with silver. And somebody talked about Nasdaq. Oh, that reminds me, I did an analysis on US oil pre-market analysis. you want to check my analysis on US oil, you can check the commentary. For those that might be trading US oil, you can see US oil finally met objective. Okay, this was the objective I was eyeballing then, right? You can check the pre-market session. I think I did 2 videos about US oil, and this was where we're trying to trade into. Okay, this, and you see it has finally happened. Finally happened. I didn't have any COT hedging program, nothing, just market structure, high time frame draw on the query. That's how I used to define institutional order flow here. That's what I did. That's what I did. Simply, I didn't do anything else. That's just simply what I did. And someone is, okay, how would you engage? You can see the change in the state in delivery. The change in state in delivery validating this to be the draw on the query. So when markets trade into here, you can sell this and manage your stops. However, if you think, oh, your stop is too much, then it's because the money you're trading with, you can't afford to lose it. Don't think it's because the setup is poor. There are folks that just need this trade to happen, and you're making so much money. Now, say you cannot trade from here and you have your key level and you're waiting for the markets to validate. Well, I taught you already in mentorship. You wait for what? Since this is the weekly time frame, not the monthly time frame, the weekly time frame has validated our monthly bias, and now that markets are trading here, now you want validation, you go into the 4-hour time frame. Okay, you want to see change in state in delivery. Well, it happened a couple times. Okay, I think if you want to be aggressive, well, you can begin to eyeball this as your validation. But look at these consecutive down candles. You can see these consecutive down candles. You can see it. That's a change in state in delivery. That's a change in state in delivery. And as soon as this candle closes, you can buy this next candle. I told you that there's sometimes the market won't return here. So sometimes you just sell and manage your stops. You can place your stops here. That's tight, but I wouldn't do that. I'll place my stops here above this high. And what? You capture the bulk of the move. Once you have a validation, this validates, and you just engage. This is very extreme market conditions. Now, this thing, do they occur often? No. What's very salient? Markets returning into the order block. But in extreme conditions like this, you just have to get in. Now, if you miss out on this move here, then you have to use intraday models to engage, because markets are sold off and you have to find a way to get in using an intraday basis. That's a very easy setup. It's the same thing. I'm teaching one pattern. Bearish order block, bullish order block, key level, high time from institutional order flow. I've been saying it repeatedly. Hey, repeatedly. Hey, Jesus Christ. Hey, I'm saying it repeatedly, and and that's what it is. That's what's selling in the market, right? Hey, I'm watching too much TikTok. I need to stop listening to TikTok. There's so many jokes about accents on TikTok that I watch and stuff, and I think it will mess with me. What you consume, my friends, what you consume. So this is NASDAQ for folks looking at NASDAQ. NASDAQ last year, bullish. We're returning to... I'm really exhausted. I don't think I can go through all of the pairs. But I'll have to try. We're returning to this yearly order block, and on the 6 months time frame was what I was eyeballing on NASDAQ last week. We're returning to the order block, and you can see the markets is traded here. So what do you want to do? You want to wait. You can see with all of the... You'd notice something if you understand institutional order flow. With all of the crash that happened in the market, markets were essentially returning into a discount, allowing institutional money getting a discount. That's why when the public are panicking in hindsight, everyone's like, oh, look at this order block. You should have bought NASDAQ here and all of that. Now you just want to wait. I'm not saying you should buy NASDAQ. I'm just saying NASDAQ is pricing at a very good discount now. NASDAQ is traded below sell-side, relatively equal lows. And it's going to take a lot for us to validate this bias, because NASDAQ is very extended, very, very extended. Okay, very, very extended. And when you look at NASDAQ, you can see there's a change in the state in delivery. You can see it, all of these things happen over and over. And you can see you can be a seller here and sell side liquidity here. And that's it. Now last week, you can see the validation after trading to a fair value gap here, and market trading to a premium and sell side. That's it. So I think I'm going to go through, I'm going to try USHF. I'm going to try USHF monthly order block, same thing, monthly order block. And I think on the long term, because USHF has been consolidating, you can see markets took at sell side here, trying to the rejection block, transaction between opposing liquidity pools at sell side here, and the bodies of the candle rejection block, high resistance, market respected it, trade into the rejection block, also rejection block, high resistance. So the market, we want to see what the market does at this order block. So it's a waiting game this week. It's a waiting game. I'm unwilling to participate because markets can either consolidate or I don't know, consolidate, or I don't know, whatever markets want to do. Okay, G, we're looking at G either returning into the range or G literally consolidate. We have a change dating day on daily time frame. Okay, so it's low probability. I want the markets to show itself, and then I engage. I call the trade on Twitter on the high time frame, and we all engage, and we make a whole lot of money. And you begin to trust in the data, because if you're not making money on it, you can trust it. So we need to get you to start making money so you can trust it. So all the same, my expectation on the monthly time frame, because institutional order flow is now bullish, I think USDCHF is going to return into this premium fair value gap. You can see the built up liquidity here. Okay, we're going to run through, market's going to run through. I don't know when market's going to run through, but as soon as we have a validation for longs, even if market trades below this low, I don't care. Since I'm not doing anything, I don't care what the markets want to do. But when the markets validate our bias, and the candles the markets are going to use to validate our bias are probably not printed yet, so that's why you have to wait. So think about it. We are waiting because our validation has not been printed yet, but we know what we want to do. But we want the markets to validate in terms of candlesticks, okay? And that's really that's what it is. Same thing with USD JPY. I think someone asked me about USD JPY. You know, a run below previous monthly low into an order block. That's a total. So we are still waiting for validation. It's literally the same thing across markets. It's literally the same thing. Now we've traded into the order block on the weekly time frame. All we're waiting for is what? Validation. Validation is what we're looking for. We're looking for validation. And when markets validate that bias, okay, and it becomes high probability. USD CAD, very similar price action. I mean, USD CAD is bullish, really. USD CAD is bullish. Okay, I went through USD CAD 12 months time frame. Okay, we ran multi-year low, Tory soup, bullish order block, Tory soup, a reaccumulation to discount. You can see this rejection. It's a reaccumulation back to discount. Markets closed above these consecutive down candles. Okay, look at the fair value gap. You can see the high is different from Euro USD. You can see it. You can see the fair value gap. The fair value gap is overlapping what? The order block. These consecutive down candles, not the high somewhere down here and then reference the high. You see periods when you reference the high and periods not. You can see the fair value gap, the order block. Okay, markets consolidated. In fact, it's happening on 12-month type of consolidation. And now we are above. Last year was bullish. Now we want to see the markets close this fair value gap, and that's the draw on liquidity, the close of this gap. And for some reasons, the COT hedging program is aligning for dollar index to be bullish, and on the 6 months time frame, we're still going through that. Market ran sell buy side liquidity here and rejected. That's absorbing liquidity here, and I think that's done. So on the 3 months time frame, we ran into what? Into this fair value gap. And if you look closely here, this fair value gap here overlaps this consecutive candles here. Okay, 1 2 3 4 5. Yeah, this is what the bullish order block. But if you put it here, this is a breaker block. Okay, and that's the breaker block. And now we want to see the markets validate bias. Okay, on the monthly time frame, the previous month was indecisive. Okay, note. So we need a weekly time frame to validate that, and then we are on longs. Aussie, literally the same thing. Aussie 12 months. Aussie. Okay, 12 months. Okay, that's fine. So we have this candle close bearish. We have the previous yearly low, markets returning for resistance, and Aussie, and that's why you notice that GBP Aussie was very bearish last week, because while foreign currencies were rallying, Aussie was selling. That's relative strength analysis. Okay, if you want to learn relative strength, that's everything you need to know about relative strength. Okay, GUE was rallying, E was rallying, Aussie was selling. Okay, so if you carry EU euro from Euro USD and AUD, the Australian dollar, from AUD USD and versus United States dollars, you see that Aussie is relatively weak with dollar index. Even while DX was selling off, Aussie was weak, and Euro USD was showing strength. Even with Euro pound was bullish. And I think we talked about Euro pound weeks back, saying Euro pound is going to reach some objective. You can go back to Euro pound chart, you see markets already met objective, but you can see how long markets stayed to consolidate and the level I said they were likely to trade into. Okay, and that's it. That's just what it is. A lot of people change bias because of market begins to consolidate. They think markets will just immediately run. No, it doesn't happen that way. Okay, so we have a very short block here, indecisive candle right above this high. Wow, beautiful setup, referencing the key level. The 2023 low, market straight into it, we're bearish. So now we've seen sponsorship. From this month's trading, and the weekly time frame has validated. This is the validation we're waiting for on dollar index. You can see we've closed below the consecutive up candles here. So if Aussie returns here, it's a sell. Yeah, it's a sell. When Aussie returns here, sell and place your stops here. Right. I mean, that's it. So while dollar index validate bias, I think when dollar index validates our bias in terms of market structure, Aussie should be around here, and then we're going to sell it. Yeah, and there's something about the yen pairs. We talked about USJPY being bullish. Okay, and it's bullish because dollar index is bullish, and the yen pairs are closely correlated pairs. So if USJPY is bullish, traditionally, primarily, I want to see GJ bullish. I want to see CAD-JPY bullish. CAD-JPY is already at a discount. You can see how this candle closed doji. So we are looking for validation that we get it. Now you can see there's still this volume imbalance here. You can see this volume imbalance. So you understand that a closing basis through the volume imbalance is also one of those things we want to see to validate our bias. But then we can also validate the markets to close here based off of what the weekly time frame is doing. But before we get there, I'm going to speak on GJ. And now we ran below previous monthly low when we think dollar index is bullish, and you notice the indirect correlation between GJ and dollar index is because of the correlation between GJ and USDJPY. USDJPY is correlated with dollar index, and GJ has correlation with USDJPY. So if USDJPY is bullish, I want to be bullish. That's how I define institutional order flow here without the COT aging program. So I'm using dollar index and I'm mirroring it across markets. Okay, so GJ ran previous monthly low. We want validation. I want validation. There's a low here, one. There's another low here, and there's another low here. So we have a 3 drive. Okay, can you see the 3 drive? And we see the markets. We see the markets trade into this down candle, this order block. Okay, so we have a reference key level now, and we can see the markets make 1, 2, 3 lows. So if market stays above this fair value gap here on GJ on the weekly time frame, that's one of the things we want to see. We're seeing a run on stops, and we're seeing market give way for support, and we'll reference that into buy side. Okay, and that's how we do it. I think the last one I'm going to do is GBP CAD. I'm exhausted. In fact, okay, let me run GBP CAD. GBP CAD has been, we've been seeing strength on GBP CAD, very similar to GBP odd, because strength in pound, weakness, relative weakness in odd, relative weakness in CAD. Although from the high time frame, from 12 months, you'd notice something that markets took out sell side liquidity here, and we've been seeing higher prices. The last year was bullish, so you'd want to expect the markets to be bullish to engage buy side liquidity primarily. Okay, and when markets engages your objective, you want to wait. Okay, that's where we're at now. We want to wait. So markets engage balance price range, buy side liquidity. That's high time frame, higher time frame. So you can imagine what's going to happen on intraday. Intraday has to reflect markets hitting this higher time frame liquidity pool. Okay, we go into the monthly chart. You can see the monthly time frame kind of like posting losses on GBP CAD, and the weekly time frame. The weekly time frame last week we ran above previous weekly high and closed inside the range. And the markets are kind of like in a premium. What do I mean by a premium? On the high time frame, markets are premium, trading to a balanced price range here. This is premium. And if we frame this dealing range, we're looking for markets to return to discount at least first. Okay, so if we take from this low here to this high, anything below 50% is discount. Now we have this consecutive down candle, that's discount. So that's one discount. And also if we can look at it from here, from this low to this high, anything below 50%, this is exactly at 50%. So you see sometimes when we say anything below 50%, their daily ranges probably you're not putting into consideration, but because of you look at it through the lens of 50%, premium and discount now makes more sense. So now if this is a discount and markets are likely to trade into a discount, and this now becomes a draw on liquidity, this consecutive down candle, this order block, this fair value gap here becomes a draw on liquidity. So if you want to go in, you are looking for prices to return into discount. So that's like short-term bearish market. Even if the higher time frame is looking bullish, it's a short-term bearish market. Why? We traded into a premium, right run by side liquidity. Last week traded bearish and closed bearish. That's validation. And all you need now is a daily time frame. Okay, you can see unlike what we are doing in the USD pairs, this is giving heads up. Now you can see there's a change in the state in delivery. Okay, but now you need the daily time frame to validate your bias. You need the daily time frame. I mean, if you've got a lot of money, you can sell this and place your stops here and wait for the markets to trade here. Okay, but if you want to wait for validation, probably after Monday's trading, you want to see what happens on Tuesday. If the 4-hour time frame, you see a change in state in delivery on the 4-hour time frame, that's your setup, and you're going to sell GBP CAD and you're going to aim for here. So I think I'm done. If you found this one insightful, I'm really exhausted. Please subscribe, share with friends, and if you got to the end, that's amazing. I mean, that's really amazing, very amazing. So share with friends. There's no better way for the channel to grow than word of mouth. Oh, I know someone who really does this thing well, and he teaches well, and he gives it up, he encourages, teaches psychology and stuff. That's real mentorship, folks. Okay, so share with friends. Until I see you in the next one, be safe.